This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and I added a compressor to the mic so hopefully the sound quality is a bit better. Today, I'm going to obviously be talking about CPI rate cuts. The market staged a hell of a reversal yesterday, so we're going to cover that. And Bitcoin looks like it is thinking about maybe crushing everyone's dreams once more. So anyway, before we get into today, I wanted to take a quick detour, okay? I wanted to talk about hot hands in trading and trading streaks, looking at the sentiment, and then I wanted to link all of this together. So first of all, hot hands in trading, okay? The longer you're a trader, the more likely it is that you are at some point going to experience streaks, okay? And whether these are win streaks or whether this is a string of stop losses in a row, this is just part and parcel of the system. And the streaks don't matter. What matters is how you handle the streaks. When most people go on a hot streak, they get punch drunk, they oversize, they over leverage, and then all it takes is one or two stop losses and they give back all the gains. Okay, we've all done it, we've all been there. And during cold streaks, traders will either have the gambling mentality where they say, well, I've got to double down and try to win it back, or allow themselves to get emotionally drained. I think Bitcoin would be a really good example of this. If buying cycle lows led to failure, buying cycle lows led to failure repeatedly, by the time we get here, no one wants to take this trade anymore because they've been conditioned and programmed to think that this thing is only going to fail, it can't possibly turn around. And if you've had to pay a bunch of stops on the way down, okay, by the time you're here, the amount of emotional and mental damage that you can take can lead people to say, oh, well, I don't want to buy this, right? I'll just sit on the sides. I'll just wait. The thing's going down. Maybe I want to be short. But being able to stay objective through those losing streaks is, of course, very, very important. So keep that on the back burner for the minute, okay? I'm going to link all this together. I've been talking about for the last week or two how sentiment has been extreme. We've also got a new kind of community joke here at the moment, which is that people were saying things like, I didn't watch the video, but you're wrong. And I was saying that this speaks to how drained people are. What's really important here is to actually make mental notes of this, because the longer you're a trader, okay, the more of these mental notes you can accumulate. And after a while, they start to form patterns in the mind, patterns that you can draw from later in life. And yes, it takes a lot of time, right? I think it's a good benchmark to say you're a beginner for the first 10 years, you're intermediate between 10 and 20 years, and you can start to call yourself an expert above 20 years in the markets. But it's important not to just say, well, who cares what other people think, or, well, let's not make notes of this. I really think it's important as traders and investors to pay attention and be an objective observer, as I often say. The comments have been so bad. They had managed to convince me that I was in the middle of a cold streak, right? And I thought this was really interesting. That's why I wanted to share this with you. I've received so many negative comments and so many accusations that I did what any trader should do. And I went back and pulled up my account history. I went through the members section. I was looking at all the trade setups and the trade callouts. And I realized upon reflection, okay, I didn't do anything wrong, which is absolutely hilarious to me because in my mind, I had genuinely convinced myself, or rather the comment section had genuinely convinced myself that I had taken 150 stop losses back to back. And when I went through, okay, it all started at this yen carry trade unwind. So back here, when we got this first initial sell-off and a breakdown, I cut all the trades. I went completely flat. We did this actually on the Friday before the acceleration to the downside. I locked in profits from trades lower down. I took profits on other stock index positions that we had, and I just kept one or two, like the Russell 2K, for example. I kept this and I choked the stop up, and I said, that's it, I'm flat for a while. And gradually, I was talking about getting some more exposure on when momentum returned. I was talking about gradually adding to positions, not saying buy the dip, bro, here, entertaining that we could be undergoing crashes. And then slowly but surely, I took a NASDAQ long somewhere in here. This got stopped out, so I had to pay one stop here. As always, I'll show you the stops, okay, because this is a real trading channel. And I also paid a stop loss buying this cycle low inversion, okay? We got stopped out and then re-entered again. So I was looking through my trade history. I was looking through the members section, like I said, and I paid 2 stop losses. Other than that, I've been nailing down gains, right? Even in the crypto equities, we nailed down multiple hundreds of percents up to here. You know, we were long multiple times on the way up. We've been in the member section, particularly slowly increasing exposure. We got some precious metal exposure, some minor position exposure. We've been slowly but surely adding to stock index exposure, and we've got this crypto position as well as 1 or 2 crypto equity positions that are currently sat in profit and looking pretty good. And that's after locking in over 100% gain in each one of them. And I say this not to flex, not to blow my own trumpet, but like I said, I never thought this would be possible. I never thought that a bunch of troll comments and haters and all of this kind of thing could lead me to genuinely believe that I was on a 10 stop loss losing streak, when in fact I only had to actually pay 2 stop losses. So that was wild. It also goes to show that, number one, I think it's important to always pay attention to the sentiment. And number two, okay, trading is a game of introspection. We must learn to master ourselves. as ever, we always have the ability to pull up the trading history. We always have the ability to review and reassess and see what went wrong, if it went wrong, so that we can learn from it. But overall, what I can conclude from this was that sentiment has indeed swung into an extreme. It's swung into such a deep extreme that these comments had even managed to convince me I didn't have a clue what was going on, when in fact all we've been doing is being open to all possible outcomes, making sure we have situational awareness, and most importantly, managing and respecting risk, okay? Not going from, oh, I'm flat to I'm at full exposure so that I could potentially wipe out a big chunk of my account, not betting too big, trying to win things back, just slowly but surely implementing the exact same strategy that we always do, sticking to the rules, okay? Having a plan and trading the plan. And so the last thing I wanted to point out is I wanted to say a massive thank you to all of the people that were actually defending me in the comment section, because I saw a lot of comments that were accusing me of things that I had never said. And this was actually driving me insane. Like, I was losing my mind, because I was like, I come on here every single day. I say practically the same thing. Then when situations start to present where we need to be open to a possible downside or not getting a blow off top, I come out, I try to be objective. I try to say, look guys, let's pay attention to a potential downside scenario here. And yet in the comment section, I was just getting completely cooked. And if it wasn't for the people that were defending me in the comment section and saying things like, no, he never said that, okay, I think I would have literally lost my mind. So if it wasn't for those people, I don't know what I would have done. Like I say, these comments got to me so badly that I literally thought I was on some kind of massive losing streak and I had to fight my way out of a hole. And of course, it wouldn't have been the first time, okay? Like that's, like I said, part of trading. You're going to go on streaks, both to the upside and to the downside. And from time to time, you do have to fight your way out of a hole. Always keep an eye on sentiment. And most importantly, always check yourself, always check your account history, always make sure you're maintaining an objective posture, always manage risk, and always build your exposure back up slowly. You have to win the right to trade bigger, okay? It's no good going from flat to full exposure. You've got to get a few trades on, let them move into profit, and then you can use the profit on the initial trades to finance risk on the second. We must win and earn the right to trade bigger. And last but not least, I want to say a massive thank you to the people that kept me sane over the past 2 weeks, because honestly, if it wasn't for you guys saying, no, he didn't say that, I was questioning my entire reality. I was like, how can I come on here every single day, say the same things, try to be as objective as possible, preach risk management, openly call my trades out ahead of time, show you when I'm stopped out to maintain transparency, and yet somehow nobody seems to even want to listen to what I have to say. Somehow everyone just wants to say it's wrong, and oh, you're wrong, and I didn't even watch the video, right? So you can probably tell by my tone, I'm completely mind blown by this experience, but as with all experience, okay, we live and we learn and we grow and we get better. So wild times to be alive, okay? And CPI did CPI things yesterday as expected. What is that classic up, down, up pattern, okay? We pumped pre-CPI. We had this huge sell-off. I think the Dow went down over 700 points before ultimately staging a reversal, and everything finished strongly in the green. We did see Nvidia come out and potentially save the day, at least so far. And Sven here absolutely nails it, okay? This market is not for stubborn people. We must maintain flexibility. We must be open to all possible outcomes. It's one thing calling for a blow off top, but if distribution is on the table, then we need to be aware of that. And if distribution becomes immediately invalidated and we start to set third angles, then it's important to be able to pivot back. And similarly, if we get another yen carry trade unwind, okay, it's no good pumping your fists in the air and screaming blow off top. We have to be completely flexible, nimble, open to all possible outcomes. Meanwhile, Meanwhile, the Fed has absolutely no idea what it's doing, allegedly, right? Allegedly. But I sit here again and suggest to you, okay, this seems like a completely nonsense stance to take. And I'm not picking on this guy, okay? This guy shares this opinion with an awful lot of people. But I just can't see it. I don't know about you guys. I cannot see it. I just cannot understand how people think that the Fed is either incompetent or that some people in the markets are simply smarter than the central bank that created the entire system and designed it in a way to slowly tax everyone via a stealth inflation tax. And I don't know, maybe I'm just way too tinfoil hatted on this type of matter. But after the CPI print, we essentially took off a 50 basis point cut from the table, according to the CME. And whenever this thing's over 85%, okay, it's usually always correct. Are we going to see a 25 basis point cut? I've been seeing a lot of comments from people saying things like, if they did a 50, it would spook the market. The reality is, the Fed is over 150 basis points behind the curve. So if they do a 25 basis point cut, the bond market's going to continue to sell off and try to force their hand even faster. And then it just means the next cuts are going to have to be 75 or 100 basis point cut, and then we will see panic, okay? They really ought to do this 50 basis point cut since they're already late to cut. They should have cut in July's meeting and they didn't. They could have easily done a 25 basis point cut and said, we're confident inflation's coming down. But instead, they keep digging in their heels unless we see a 50 basis point cut. And if you're in the camp of people that says this will cause panic of 50, remember, they can always just come out and say, look, we recognize the situation. We recognize inflation is coming off rapidly. We recognize we're over 150 basis points behind the curve, and we just want to make an adjustment so that we can stay on top of this. Okay, if they come out and say that, then why would that cause panic? But instead, it seems that they're going to dig in their heels, only do a 25 basis point cut, remain well over 150 basis points behind the curve, especially after the bond market continues to price that in. You know, monetary policy is already too tight, and that's the absolute truth, and that's why we continue to see inflation come off. In the comments yesterday, okay, I saw so many comments from people saying that no way you're getting 2.5. That was absolutely dominating the stream. No way you're going to get mid-twos. Absolutely no way. Inflation is sticky. And yet there it is, okay? 2.5% year over year. As expected, this is the first major drop in CPI, so happy days there. And take a look at the goods versus services CPI. Does this speak to a Fed that is ahead of the curve? I don't think so. And a lot of people, after the fact, remember, okay, so before CPI print, everyone was, no way you're getting mid-twos, no way you're getting mid-twos. Then only after the fact did we start to see people come out and go, yeah, well, that was forecasted. So we just hit expectations, okay? And even some people were looking at the core CPI, thinking that it was hotter than expected because it's still on a 3 handle, 3.2%. But in reality, it was a lot colder. Whilst headline CPI might look like plus 0.2% month over month, it was only plus 0.8% month over month NSA, which is the second lowest in 2024. On a year over year basis, headline CPI is 2.5%, the lowest since February 2021, and still some people are incorrectly maintaining this is above the Fed's target. This is pretty much in line with that 2% target. Remember, it's not actually targeting 2% CPI anyway, it's targeting 2% PCE. And here's the key part, historically, 2% core PCE is consistent with about 2.5% core CPI, which currently puts us right around where we need to be for the Fed to declare victory over taming inflation. And again, most of this hotness in core CPI comes from Shelter, which added 19 basis points to the overall number, but Shelter was reported up just 0.4% month over month NSA, which is 0.5% above the market rent inflation. If Shelter reflected actual market rent inflation, core CPI would be negative, as you can see at the hard right edge here. So to recap, headline CPI is already within the Fed's target, and core CPI is just 0.7 percentage points above the inflation target. However, excluding Shelter from the equation, both headline and core CPI are now well below the target, making them both de facto too low for what the Fed is aiming for. This means the Fed funds rate should already be much lower than 5.3%, as I've been saying for a long time. They are behind the curve, 150 basis points behind the curve. How long is it going to take them to cut 1.5%? You tell me in the comment section. Overall, the trend is down. Continuation of disinflation is in play, and the risk here is deflation rather than continuation of inflation or sticky inflation as the majority of the market participant thinks. So of course, we're going to discuss how this translates to crypto and to asset prices in the chart section in a minute. But before we do, okay, some good news for the UK and Bitcoin, as the UK just introduced a new bill to Parliament to clarify crypto's legal status. Currently, there are two categories of property: things in your possession, e.g. gold, money, cars, and things in action, such as debt or shares. And this bill introduces a third category of thing to allow for certain digital assets to attract personal property rights. Meanwhile, the hash rate just hits a brand new all-time high for Bitcoin, again representing capital expenditure and investment into the network, increased security. There still sits around, just under this time, 20 billion of shorts ready to be liquidated above $72,500. And remember, this is occurring against a backdrop of a sentiment that is so negative. And we might possibly have some fuel to squeeze the Bitcoin price into those short liquidations in the form of the global liquidity index. Okay, check out this. It is breaking out above the moving average. The last time it did this, right here, okay, broke out above the moving average, we saw Bitcoin enter expansion. We saw the same thing back here. Breaks out above the moving average, Bitcoin moves into expansion. So if this breakout can continue, we should indeed see that translate to higher Bitcoin prices. And whilst everyone is panicking and saying, no way are we getting any more all-time highs, whales continue to buy aggressively, just like we saw right at the breakout level of 2020. They are doing the exact same thing now, very, very similar structure, sat around the prior all-time high, ready to break out. They are getting ready to buy the all-time high break before that move into expansion. And the question is, what if, okay, is this on the table? To me, there doesn't look to be anything wrong with this, but playing the advocate here, Bitcoin has actually never retested an ascending diagonal from the prior peaks. So if we connect these two, you can see we never made it to a third touch. If we connect this one and this one, you can see we never made it to a third touch. So does that mean that we can't go 220, 250K? Perhaps. Can we get somewhere in the middle? I don't know, 100, 150. That'll be okay for me, personally. As ever, time will tell. We'll take it one day at a time. I don't really see any reason why this couldn't happen. Okay, it'll probably need a lot of things to go in its favor. Some kind of DT win in the election or the announcement of a 1 million strategic reserve for the US. I would imagine something like that could certainly drive this. As ever, it's not a prediction or a call, just staying open to all possible outcomes here. And so moving into the charts, I was saying to the members section yesterday, we seem to have staged a massive reversal in the stocks. Okay, the base case was that we were going to set third angles. I was talking about being open to seeing downside into a cycle low first and then some kind of pop up, and we would have this kind of distributive pattern forming. I still think we need to be on guard for that, but for now, if the market wants to respect this as a third and final angle, then who am I to disagree with it? If we get some kind of breakdown from here, I will have zero tolerance policy and I'll be waiting for the next cycle low to show up. I was also telling the members that this cycle low, whether it comes from a failure here or whether it comes much higher up, maybe get squeezed, cycle low, that cycle low for me is likely going to be the last time that I add any longs on the stocks. It's going to be the last time you see me get long on stocks before ultimately looking to call tops. So I don't know if we're going to get something like this play out, one final squeeze, third and final angle violation, and that's where we duck out. Okay, that's where I declare tops, that's where I go short. I don't know if that's the situation we've got unfolding, or whether perhaps we have to even move lower into that next cycle low, and then from there you'll see me get long and either again set in third angles or some kind of distribution and be selling trendline breakdowns here on the second angle. But either way, okay, after we've seen this next cycle low, whether it's higher up or lower down, I will be getting long one final time, and then I will be ready to tell you publicly and declare it publicly that I'm not going to go long anymore after that. And any kind of push from there, whether it's a marginally higher high and a distribution top or a big screaming blow off top, I will be selling trendline breakdowns, I will be flipping short, and I will be officially calling tops here. I am almost ready to do so. For now, I remain long and strong, okay? The Dow Jones, look how close I got to being stopped out yesterday. Very, very close indeed, but we're still in. That stop loss, you can cross-reference in any of the videos, okay? They don't move, and the level 3 members can vouch. That's the exact number that I typed in the community tab when I executed the trade live. So far, we're hanging in there, okay? So far, we're hanging in there. We'll see if we can get continuation. There might even be an opportunity for people to add on a small breakout, something like this. The NASDAQ is right into no man's land, isn't it? So we'll see. We'll see if it can get a breakout. We'll see if it can push to the upside. I really like what I'm seeing out of the VIX so far. Okay, we were talking about getting a push down and an opportunity to hedge lower down. That looks to be in play now, so happy days there. The Russell 2K needs to start to push off, but the stop is choked up, the risk is managed, and we can't possibly lose on this one. Gold is consolidating right around that prior high and looks to me like it wants to rip higher. So looking to see that come out of here in the not too distant future. And if it can do that, I would largely speaking expect silver to get this breakout as well. That's why this position is queued here. So looking forward to seeing if we can get that. Bitcoin, what else is there to say really, right? We took the cycle low and we got clear invalidation. I'm still operating with a zero tolerance policy. We reject strongly at resistance here, and I will be managing risk, moving the stop to break even, something like that. And breaking out here, you might even see me add. As ever, we'll take it one day at a time. We do need to keep an eye on the Dixie here, okay? We certainly need to keep an eye on this. Get a breakout, and that's me declaring a 3-year cycle low and a bottom for the Dixie. Conversely, reject a resistance and roll over, okay? And it should be party time for the blow off top. And notice how the yields, okay, still screaming at the Fed, calling out its incompetence, letting it know how far behind the curve it is. Let's take a look at the US 2-year yield. Once again, tell that to the bond market, okay? Tell that to the bond market. The bond market has absolutely had enough of the Fed and its stubbornness. As ever, we'll just continue to take things one day at a time. We'll continue to be open to all possible outcomes. And we will continue to listen to the market when it speaks. I'm your boy Camel. I hope you're doing well in life. Until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key, taking us normies on